Thank you for joining today's session. We will be getting started shortly. We do have a lot of folks signed up for today's session, and we want to give everyone a moment to log on and get connected so that we can dive into today's session. I do want to thank you all for joining us today. I'm Jasmine Garrett here with the New Jersey Economic Development Authority. Today's session is an informational overview on the new requirements for becoming a qualified CPA firm for GROW annual report certifications. A quick housekeeping note, we do suspect that many questions will be answered in today's presentation. However, you are able to write in questions at any point during the presentation using Zoom's Q&A feature. It is one of your Zoom command options and will allow us to make sure we are able to get back to you and let others see these questions and answers as well. Today's session is being recorded and will be posted on our NJEDA and YouTube pages. The slides and other resources will also be available in the next few days. Now to get us started with the presentation, I will shift things over to NJEDA's Director of Incentive Servicing and Compliance, Kiera Black. Thank you.
Thank you, Jasmine. Hi, everyone. Good morning. My name is Kiera Black. I am the Tax Credit Compliance Director in the Incentive Servicing and Compliance Department here at NJEDA. Thank you so much for joining us. Welcome, come in. I'm sure some of you recognize my name, so now you can put a face with a name. I'm here today with my colleagues, Tanya Williams and Rich Dickinson. Tanya.
Good morning, everyone. I'm Tanya Williams, also a program manager with Incentive Servicing and Compliance. I oversee post-closing compliance and services for a diverse background of incentive projects, managing a team of responsibility for evaluating the full life cycle of tax credit programs.
Rich.
Hi, I'm Rich Dickinson. I'm also a program manager in the Incentive Servicing and Compliance Department. I am a partner with Tanya Williams, and we perform the same tasks and duties. Nice, thank you.
Alrighty, thank you both for helping me present today and provide this information to everyone. This important information, exciting information that we have for everyone. Just a few housekeeping items, as Jasmine mentioned. If there are questions, please use the Q&A feature in the Zoom. We will not be taking live questions, but yes, please feel free to put any questions you have in the Q&A feature. If time permits, we will address those questions during this webinar. However, if time does not permit, then you can put the questions to our portfolio services email box. So that's portfolioservices@njeda.gov. You can send questions there and we man that box and someone will provide a response to you. That's just a few housekeeping items. Okay, so today we are going to be talking about the adopted amendments to the GROW regulations, where that is now going to involve qualified CPA firms. So we're going to give an overview on what that means, what that looks like, how it impacts annual reporting for GROW projects, and how it impacts our grantees. Next slide, please. Okay, yes, we've introduced ourselves. Again, Kiera Black, Tanya Williams, Rich Dickinson. I'm sure many of you are familiar with us, but for those of you who are not, you will become familiar with us as we navigate these qualified CPA requirements that are going to be in place. Okay, next slide. All right, so this webinar is, again, a general overview. It's not going to go into any specific details, but we do need to make sure that everyone is aware of the adopted amendments to the GROW regulations that are going to impact annual certification requirements. This is going to be applicable to EOA GROW projects. There are also legacy GROW projects that we have in our portfolio, but this change is not going to impact the legacy GROW projects. It's only going to impact the GROW EOA projects for now. And that's going to be effective for those reports that are coming due April 30th of 2026 and after. So again, it's a general overview. We will have subsequent classes, though, however, that are going to go into depth. It's going to go into all of the details. It's going to be very granular because we want this to be successful. We want everyone to understand. We want everyone to be fully comfortable with these changes. We know that, regs change. There are impacts to programs that we service here at the EDA. That's not uncommon, and we have to pivot when those things happen. And this is a significant change, so we want to make sure that we provide everyone with all the tools and the support that's needed so that, again, everyone can be successful. It can be a smooth transition, not only for the grantees, but for also us here at the EDA as well. So there will be subsequent classes that will touch on the AUP requirement itself, so the agreed upon procedures report that is going to be needed from the qualified CPA firms. Then we'll touch on, in the next training, the policies that EDA uses for reviewing jobs and bonuses for those GROW EOA projects. So we have a particular way that we review our jobs and the bonuses when those annual certifications are submitted. We are going to share what those are, and that is going to allow the qualified CPA firm that will be handling the annual certification submission a chance to determine, is that a method that they would like to utilize, the way the EDA does it, or if they have other methods that they may want to employ. And then the third training will be our demonstrations of the portal, the NextGen portal, where those annual reports actually are submitted to. So again, it's going to show, it's literally going to be a visual demonstration on how those reports are to be submitted. So again, it can make things a lot less stressful. It can show, that training is literally gonna serve as if it were a side-by-side training to help everybody understand how to get those submissions into the NextGen portal. Okay, next slide, please. So the GROW New Jersey Assistance Program itself. Now, I know many of us here are very familiar with GROW. However, there may be some here who are not. And as I mentioned earlier, there are two GROW programs. There's the Legacy GROW program, and then there's the GROW EOA program. Both programs were created to strengthen New Jersey's global market base. It literally was a program to help New Jersey have a stronger attraction for businesses, so that if you signed up for this program, there were incentives that were offered if there were requirements that were met. So capital investment was one of those requirements. There had to be some level of investment in the infrastructure of New Jersey. There had to be some level of investment in either erecting a new building or renovating an existing building, but somehow there was some level of deposit of increasing the infrastructure in New Jersey. That was a minimum requirement that the applicants had to meet in order to participate in the program. Also, applicants had to either retain existing jobs and or create new jobs, again, meeting specific requirements. There, again, needed to be some level of strengthening of New Jersey's economy. There were going to be jobs created with minimum salary requirements to be met. So again, it's going to allow New Jersey to be more marketable and more attractive for businesses to bring their headquarters or to bring their facilities to New Jersey. And in exchange for that, there were incentives that they could earn. And those incentives could range from $500 to up to $15,000 per person. And that, again, they had certain requirements to meet. They had to certify that the project was completed as they indicated it would be and how the board approved them for it to be. And once that requirement was met and everything was in compliance, then annual report submissions must happen. That is the department that we work with, which is the Tax Credit Compliance Department. Those annual reports that come in for a specified term could be anywhere from 7 to 10 years of being eligible to receive a tax credit. But then there's also a commitment to stay in New Jersey and maintain the presence of those jobs for years beyond receiving the tax credit. So this is just a little background about the Grow New Jersey program itself. Again, there may be some here in this webinar that are not familiar. I'm sure there's plenty that are, but for those who aren't, that's a little bit of background about it. You can definitely go to our www.eda.gov website and look in the Financing and Incentives tab. And if you look under inactive programs, you will find Grow, and you'll be able to get a lot more information about the qualifications and what the program is about to really give you a thorough understanding of the program that we continue to service. Okay, next slide. So let's talk about these adopted amendments that we are hosting this webinar about. So as you can see here, effective April 1st of 24, which was last year, and the amendments have been put in place through May 31st of 2031. It is mandated that a business shall submit an annual report that includes a certification from a qualified independent CPA. And that report is indeed the agreed upon procedures, the AUP. So this adopted amendment is in essence mandating that when the annual report is submitted, it now needs to be submitted from a qualified CPA, and that CPA firm needs to furnish an AUP report that specifies what methods were utilized and how did they determine that this report is indeed compliant. So that means that the information in the AUP report needs to have the underlying and supporting documentation that's going to, again, confirm compliance. So we need to ensure that if you are going to be a qualified CPA firm that is going to be doing an AUP report for these GROW annual certifications, that you are doing a report that is going to be acceptable and is going to ensure that your client is indeed compliant so that they can qualify for the tax credit and that they can receive a tax credit for that tax reporting year. So it is very important to understand, again, we know that we get updates to regulations. That's not uncommon in this tax credit compliance world. But this specific one, we wanted to ensure because that is a departure from what we have been doing. We have not required CPA firms to submit AUP reports prior to now for the Grow EOA products, but that is going to be changing, and that is going to be effective for the reports that are due April 30th, 2026 and after. Now, I know here it says effective April 1st, 2024. However, we understand that we had to get this implemented. We had to understand the dynamics of this. We had to get this created so that it could be relayed to everyone and everyone could be able to follow it and understand it and do it properly. So we did not have the qualified CPAs listed on our website. Therefore, we were not enforcing it. But once the trainings are completed and the qualified CPA firms actually are listed on our EDA site, and there are those options available for our portfolio to select from to retain to actually complete the AUP report and submit the annual certification, then it will be enforced. And we are aiming to get that list up in the very top of first quarter next year. So sometime in January of next year. Okay. You can see these published adopted amendments. They're on our public access page under rules and regulations on our EDA page. So you can see them in totality. This is just an excerpt here, but I did want to show you the exact language that the legislation was updated to show. Okay. Next slide, please. Okay, so what's required? I touched on it a little earlier. We are going to need an AUP report. So yes, a CPA firm that has been qualified by the EDA does need to be retained. That CPA firm will need to prepare an agreed upon procedures report. Those procedures will be agreed upon between the CPA firm and the GROW grantee. And that report is to be submitted with the annual certification submission. And it's going to indicate the methods that were used to confirm that the project is remaining eligible and that they are indeed compliant to receive a tax credit certificate for that tax reporting year. Now, how the CPA firm and the individual CPA, they do have to be deemed qualified. So EDA, again, needs to produce a list of CPA firms and CPAs that have been deemed qualified. We need to put that list on our website, and that's the list of people that satisfactorily attended the training classes. Those 3 training classes that I mentioned earlier, those are required. You must attend each of the 3 training classes in order to be deemed qualified. So after the trainings are complete and we have the list of all the companies that have attended, the companies, our grantees, are going to utilize that list of CPA firms to select a company that they would like to retain for that company to submit their GROW annual certification. We anticipate submitting that, publishing that list in January of 2026. And that aligns with the ending of, for those, especially those calendar reporting companies, calendar year reporters, filers, they are ending their 2025 tax year on 12/31 of 25, and their annual report becomes due April 30th of 26. So the list is going to be published at the top of 2026, which gives time to retain the qualified CPA firm and to prepare the AUP report and the annual certification and submit it through the NextGen portal. Okay, next slide. Okay, so now Tanya's going to talk to you all regarding the changes to the procedures. Again, there were things that we currently do. Tanya's going to talk to you guys now about what's going to change.
Thank you, Kara. So I'll take a moment to provide an overview of the current review process for GROW, EOA, and the reports, and the upcoming changes resulting from recent program amendments. Currently, our incentive servicing officers conduct a comprehensive review of each annual report submitted by GROW applicants. This involves a detailed month-by-month evaluation of each employee's activity to ensure that all program requirements for tax credit eligibility are met. Our review process includes verifying job counts, confirming employment eligibility, and assessing whether each position satisfies the statutory criteria. As Kira mentioned, effective with the April 2026 annual report submissions, amendments to the Grow New Jersey program will shift these responsibilities to EDA qualified CPA firms. These firms' scope of work will encompass validation of employment activity, verification of statewide calculations and applicable bonuses, and confirmation of all required certifications. Upon completion of this review, the qualified CPA will produce an AUP report which demonstrates that the CPAs did due diligence in the applicant's tax credit eligibility. Next, we'll have Rich Dickinson to give an overview of how a CPA can become qualified.
Thank you, Tanya. As Kira has mentioned numerous times during this webinar so far, that a CPA firm has to become qualified first to be put on that list for our companies to choose from to submit their annual reports. That is going to be done by, again, attending this webinar and along with the 3 training classes that have been mentioned before: the AUP class, the NJEDA policy class, and the Next Gen portal class. You'll be able to sign up for those training classes via an application that there'll be a link at the end of this presentation that you'll be able to fill out that application to attend those 3 classes. The principal contact and any individual CPA at the firm who will be involved with the GROW annual reporting must attend these 3 training classes. And to register for each training class, the website here has been provided for each class. To be included in the CPA class, you are agreeing to be listed on our website. There will be, during our normal QC and QA process, there could be instances that a CPA firm could be suspended or removed from the list depending on those audit results. And that's as long as you maintain the qualified status based on your performance, those will be determined. Now Kira will continue on with the next slide.
Okay, thank you, Rich. Okay, so let's talk a little bit about the AUP itself. Prior to now, as I mentioned, annual reporting did not require an AUP. However, every project in our portfolio at time of overall certification, it did require an AUP. So there is some familiarity with having an AUP. Now, the things that were required for the overall certification AUP are a bit different than what will be required for this annual reporting AUP. But we still want to make sure that everyone is clear on what those things are. So the best way to prepare for having that AUP report as the CPA firm that's going to be doing the AUP report is having the guidance from the EDA. We will furnish an AUP guidance to everyone to advise exactly what we are looking for. It will be very clear on what's to be included in the AUP report, what needed to have been tested, what needs to be attested to in that AUP report so that we are clear that what is being provided has indeed been vetted. In order to begin to prepare an AUP report, it's definitely going to start with just the necessary documentations that are needed for that CPA firm to be able to provide information required for the AUP. And that's the standard information like the approval letter, the incentive agreement, the overall certification, confirmation, those particular documents. The job log itself, we have a particular job log that is utilized annually. And that log is going to be provided from the company to the CPA firm. It's going to have all of the raw data regarding the actual full-time employees that are actually being in the qualified business facility. In the AUP report itself, it needs to determine of those jobs listed on the job logs, which ones are actually eligible, which ones meet all the eligibility requirements. Simply because it's listed on the log does not automatically mean that it is eligible. So the AUP report will need to determine, A, is it eligible? B, if it is eligible, what classification is it? Is it a maintained job? Is it a retained job? Is it a new job? Maintained jobs are those that they are in the qualified business facility. They do physically work in that facility. However, they are not eligible to be incented. Retained jobs are, again, full-time jobs that are in the facility and are compliant, and they are eligible to be incented at the retained job rate. And then new jobs are those that are, again, sit in the qualified business facility. They are eligible and they are incented at the new rate. So knowing the full-time jobs that are going to be provided on the log from the grantee, and then making a determination if those jobs are indeed eligible. And once that determination is made, then the classification of the job for maintained, retained, and new, that must be completed with every annual reporting, and it must be specified in the AUP report what the methods were that were utilized to determine the eligibility and the classification. The same thing applies with statewide. That's another requirement that must be met every annual reporting year, that what are the statewide jobs? So those that are not only at the qualified business facility, but the grantee may have other facilities throughout New Jersey. We want to know what the total number of jobs are in the state. The AUP report will need to address that as well. Regarding the per person award amount that is earned, that could come with the base rate only, but it could also be a base rate plus applicable bonuses. If the company were awarded bonuses at time of board approval, and then they showed at time of overall certification that those bonuses were indeed still intact and earned, then those bonuses can be included at time of annual reporting. But every year, they have to be shown and proved that they indeed are earned. So the AUP report needs to address that as well. The AUP report needs to determine what are the methods that were utilized to say, yes, this particular bonus was indeed earned, and this is how much of the bonus that is going to be applicable for the per person award. And it could be one bonus, it could be 4 bonuses. It can range. So the AUP report needs to specify exactly what that bonus is, that it indeed was earned. Here is how we determined it was earned, and this is the amount that we calculated was earned. And then the AUP report needs to also address the entire award calculation. So again, we know that there are going to be several jobs listed on the log. All of those jobs are going to have a certain classification: maintained, retained, new. And then each of those classifications are going to have a per person award amount for the base award. And then they can also have additional bonuses. So once all of that is now added up together, we need to have that AUP report reflecting what the total award calculation is per person for retained, per person for new. Remember, maintained does not get awarded at all. And then once the new and the retained are tallied, then you would have what your overall award are for that tax period. And finally, the AUP report needs to substantiate the certifications. A part of an annual report submission is that the CFO or the highest ranking officer that's comparable to the CFO is certifying to several things for that annual tax period. And the AUP report needs to confirm that, yes, we reviewed these certifications and these certifications are indeed accurate. They were signed by the correct person. They were dated properly. So that AUP report needs to also reflect that the certifications are indeed executed properly and they are in compliance. Okay? So I know everyone is thinking, well, what are the next steps? Next slide, please. The next steps are attendance to the training classes. We must have, in order for you to be deemed qualified, you must attend all 3 training sessions. But before you can even attend the training sessions, you have to submit an application. Please scan this QR code here, and it will provide you with a link to put you into the application itself. Complete the application, submit a fully complete application to us, please, and then once we receive your fully completed application, you will be provided with the link to access the first training class. The first training class are able to, in that first training class, that will be the AUP training. We're going to start off with the AUP because that's probably the one that's the most involved. And prior to the class, we are actually going to furnish you a copy of the AUP guidance that we have crafted. So you won't go into it blind. You'll have an opportunity to look at that AUP guidance, to provide any questions that you have before class. You can use the portfolio services mailbox to put questions in there. We want this to work. We want everyone to be comfortable with it. We want everyone to understand it. We want everyone to win, including ourselves. So we have to work collaboratively with you all. So we're going to, again, furnish the AUP guidance prior to that first class, but you have to submit your application. The only way you're going to get a link to the registration for the first class and the AUP guidance is submitting a complete application. Once you submit the application, we'll give you the link to register for training number 1. We'll furnish you with the AUP guidance. You'll have time to review it, submit any questions that you have on it. There may be something that, perhaps didn't occur to us, and it may be a very valid point or something that is super helpful. We want to hear all that. We want your feedback. We want this to work. We want everyone to win. We want this to be successful, because the success of it is going to help to expedite the review process of these annual reports. that is the end game here. We want everyone to, our jobs in tax credit compliance is to ensure compliance. That's number one, while providing superior customer service. We want to be able to do that. And with the launching of this qualified CPA AUP requirement, that's going to help us do that. Now, yes, there will still be due diligence on our end when you submit your annual report. Yes, we still have to do due diligence. But this AUP submission coming from the CPA firm is going to help to expedite that and get us to the finish line, hopefully a lot quicker than we have been. So it is going to be really, a really good thing for everyone, for all parties, when the qualified CPA firm submits the annual reports, including the AUP report. And we're going to give you all the tools to be able to do that in a thorough, quality way, so that we then can do our due diligence in a more expeditious way. So please scan the QR code here, submit your application. We are going to conduct the training classes next month. They're actually going to be scheduled for the week of the 15th. So 12/15, 12/17, and 12/19 are the anticipated dates for the training classes. We intend to provide, again, the AUP guidance, and we also intend to provide the log, the job log, because, again, we want to give you the tools that are going to be, helpful and allow everyone to be successful. We want you to have a chance to get to know it, to have any questions vetted about it that you may have. And that way, when it's time for the training course, everyone can really glean more from it. Okay? So those are pretty much the next steps that we have in place. Again, please put in your application. Please submit a thorough application, and we will furnish the link to the training and the AUP guidance and the job log template to you upon receipt, so that everyone can be in the know and be prepared for the training sessions. So we're excited about this. We hope that you all are excited about it too. Again, we know change is inevitable in tax credit compliance world. Pivoting is just something that we have to just understand is just the nature of the work that we do, but we want to do that in the most effective and efficient way. And we don't want, again, we know change is going to be uncomfortable, but we don't want everyone to have major discomfort. So that's why we're trying to be as proactive as we possibly can. And, we just ask for your patience. We ask for your grace. We thank you for your understanding in advance as we navigate these waters. And again, this is a collaborative effort. So your feedback is welcome. We appreciate it. We want it. So please, keep that in mind as we, navigate these waters together. Next slide. And I believe that is it. That is the end of our presentation. If you have questions, let's see, did we have any questions in the Q&A? Let me see where there.
Yes, there's a couple of questions.
There's some. Will the EDA be issuing the AUP? Yes, we spoke on that. So I get it. There are some concerns about, this change. Again, we just spoke about how change is uncomfortable, that there is going to be some difference. We never required a CPA before for the annual reporting segment. But yes, we are going to need the CPAs to be involved in annual reporting, and they are going to be required to submit an AUP report. Now, 2026, again, is when we're going to start this, starting with reports from beginning April 30th, that are due April 30th, 2026. We're reasonable people. We understand that this is new and there may be some road bumps and detours that we may have to navigate. We're not unreasonable. Is there going to be some flexibility in 2026? Probably. It's our pilot year. This inaugural year, yes, there may be some flexibility with submitting the AUP report via the CPA, the Qualified CPA Firm. In 2027, not so much. So keep that in mind. Again, we're reasonable people. We understand that this is a big change and that, you know, it has to be implemented at some point. So yes, it may be some flexibility with 2026 reporting, but it is a mandated requirement, and that is the expectation. So again, there may be some flexibility with 2026, 2027, not so much. But that's all, you know, we're going to work through that as we're going through it. That's why I repeatedly said this is a collaborative effort. And we thank you all for working with us, and we ask the reciprocal. We are going to work with you as well. And no, the CPA is not taking on the role of the EDA staff. Staff is still going to perform due diligence on annual reports that are submitted, but the CPA is going to submit a quality, thorough annual report that is going to be helpful for when our staff does do their due diligence. It's going to be done more expeditiously. Therefore, you're going to see that the tax credits are going to be able to be turned around a lot quicker. No, the trainings are not on the website. The trainings are going to be provided to those who submit an application. So if you apply and you submit a thorough, complete application, you will then get the link to the registration for the training, and you will also get the AUP guidance and the job log template. Yes, there is a template that the CPA can reference. We're going to provide that AUP guidance. Can non-CPAs attend the training? Are there any fees for the training class? No, there are no fees for the training class. And regarding non-CPAs attending the training, we will have to let's put a pin in that for now. That we need to circle back about. So let's TBA on that. TBD on that. In the application, what is peer review to be uploaded? So all CPA firms have a peer review report. So that report for the that they receive, it's typically, I want to say 3 years. It needs to be within every 3 years that peer review report happens. That report needs to be submitted as a part of the application. Do we just email it to that email? I'm not sure what that question means.
And the
But,
grantee received the training.
So you would, if you have questions, you can email to the portfolio services at njeda.gov email. I'm assuming that's what that question means. Do we just email it to that email? So I'm not sure what that means, but that if you have questions, yes, you can email that box. We do review that box quite often. So you can feel free to email that box. As a tax credit consultant, would I be able to attend the 3 training sessions? Again, that's the question that we said we're going to put a pin in it. My knee-jerk reaction is yes, anyone can attend the training, but I just want to make certain of that because this is specifically for CPA firms in order for the CPA firms to become qualified. So again, knee-jerk reaction, yes, you can attend, but I am going to double check that and make for sure that that is something that can be done. Legacy Grow, no, this is not applicable to Legacy Grow right now. It's EOA Grow is what will be impacted by this. Okay. Let's see. Well, the question here is, can the list be produced sooner than January? The trainings happen in mid to late December, so we would not be able to produce that list until everyone is officially, trained. So it wouldn't be much sooner than January in any instance because, again, the trainings don't happen until mid to late December. Let's see. Trying to go through the questions
Here,
here.
there was one comment about anyone can attend the webinars, but only CPAs can be qualified. Just another comment.
How much should a company expect to pay a CPA firm for an AUP? That would be a question that when you are vetting CPA firms and going over what the requirements of the AUP are, that CPA firm would be able to answer. We are not an accounting firm, so we really aren't able to answer that. But if this is a service that the CPA firm decides they would like to add to their menu of services and offer to the portfolio, to the grantees in this program, they would be able to advise how much that service is that they would want to charge for it. Yes, both Legacy and EOA are a part of the GROW programs, but this particular change is impacting the GROW EOA. It is not impacting how we are doing annual reporting for GROW Legacy at this time. Okay. And yes, GROW, our GROW grantees will still have access to the portal. That's not changing, but the CPA firm, the qualified CPA firm, will be submitting on behalf of that GROW firm. So if you currently do that yourselves, then the CPA firm is going to submit on behalf using the portal, and they will submit that AUP as well, in addition to the log, the certifications, all the things that are required so the same things that are required for annual reporting are remaining the same things. So all of those things that you still need to report, your WR30s, your tax clearance, your certifications executed by the CFO or, a comparable officer, that's all still required. The CPA is going to submit that annual report on your behalf as well as the AUP report. Okay. Is the peer review to be emailed to Portfolio Services? Yes. Please email that to the Portfolio Services email box as well. So when your application is received, we will see that you submitted the application, but in order for it to be complete, we still need to see that you also submitted a peer review to that email box, the Portfolio Services box. Okay, I think I addressed the lion's share of the questions in the Q&A. Any additional questions, again, that you think of as you guys, kind of reflect on this webinar and mull things over, please send them to the Portfolio Services at njeda.gov box. We will address them. Again, we want this to be successful. Navigating change is something that we're all accustomed to. There's something that is just par for the course in the tax credit compliance world. But we want this to be successful. So, please put your questions in there, submit your applications, and, get ready for those training courses, which again comes 12/15, 12/17, and 12/19. So please save the dates. And with that, that ends our webinar. And we thank you so much for your attendance. And this will be available to you on the NJEDA YouTube page. So you can reference this recording in the future if you so desire. Thank you so much.